G'day folks, welcome back to Pete's Investing. It's April 17, 2024. This is the currency update for the Aussie US, the Euro US, British Pound US and the New Zealand US dollar. Now just be careful, these are all predominantly trading south or bearish, but we've got a retrace on all of them and that's why I'm going through these today. Before we go to the charts, this is the heat map of today's results, and I'll be covering those currencies I mentioned, those four currencies, and you can see they're all trending bearish with the exception of the British Pound US still long on the monthly, but overall bearish on the weekly and daily. And these other instruments as well, we cover various days on various other videos. Looking at the Aussie US first off on the monthly, weekly and daily. Again, you can see here we're still bearish on the monthly. We're also bearish on the weekly, and by bearish I mean when the CCI breaks above this moving average band, it's bullish, giving us this green pattern. When it's below the moving average band, like in that case there, it's red or it's bearish, and it's currently red as well on the monthly, weekly, but also pretty strongly down on the daily as well. However, if we go to the daily and the hourly charts, first off, let me zoom out on both of those. You can see there the stochastic market forecast indicator is broken below the 50 level on the daily, and that's a bearish sign. And if I zoom in, you can see there we had a bullish divergence. We use the CCI 150 as well as a trend indicator, but also as a divergence indicator. You can see they had a bullish higher lows on the CCI versus lower lows on the price. It bounced. In this case, had I drawn a Fibonacci, I'll do that as an example. So had I drawn a Fibonacci between the recent high, we only go back to the recent high before the divergence started. That would have been it there. The minimum target range is typically, and I draw that target range, is typically the 23 to the 38% level. Now in this case it's gone well above that, and it's gone almost to the 100% level, hence that resistance at 68.71. So since then it's bounced back down. There's no divergence on the daily. The ADX indicator is giving us a bearish signal as well. But zooming in on the hourly chart, you can see there it's very much oversold. It's below the 10 level, which is an oversold indicator. You can see there back there it did actually bounce off there after being down there for a number of months actually. Now this could stay down there for a while, so there's no guarantee it's going to bounce tomorrow, but if we zoom in, again I highlighted a couple of bullish divergence there. There's a bullish divergence there versus lower lows on the price. It bounced higher than the 100% level. Another bullish divergence there, bounced almost to the 100% level on that one. And there was also a bearish divergence here, lower highs versus higher highs, and it broke down again below the 100% level there. And we're currently sitting at on a bullish divergence there between those lows, higher lows versus lower lows. Now, there's no guarantee it's going to bounce from here because it could always drop further. And with the CCI as long as the CCI keeps rising, we're going to consider that a bullish divergence. And for that, we need to look at that also breaking higher, and that'll go to that recent high there. So if it was to bounce from today, because remember, this could always keep falling. So in other words, had we spotted it back there, the price started making a bit of a rise, but then it fell off again. So this could keep falling off. I don't normally trade these divergences. I use these as an exit signal, as one exit signal. To say, for example, if I'm going long here, as an example, and I see this divergence, then it's probably about time I took profits. Next, look at the Euro US. Again, monthly it's bearish, weekly it's bearish, and daily it's bearish. And the way, just as a trading idea, the way I use this is predominantly when all three timelines are aligned. I like to look at it, for example, you're trading on the daily based on the monthly and weekly trends. We take a short position when it breaks below that moving average band, so it would have been a nice little trade, and you'd probably still be in it if you're trading on the daily time level. Now, jumping to the daily and hourly charts in more detail, again zooming out, you can see the stochastic market forecast is below the 50 level, so it's overall bearish as well. The ADX is giving us a bearish signal, and also the CCI 150 is below the moving average band, which is giving us a bearish signal as well. Now on the hourly chart, if you're trading on the hourly or the intraday timeframes, you can see there are a number of bullish and bearish divergence marked with rectangles, which is where the minimum targets were. Remember, don't get too greedy. Sometimes these only bounce up to that minimum target before making further downside, as it did there, for example. In this case, actually, where we are now, we also got a bullish divergence versus a bearish or lower lows on the price. But again, as long as the CCI keeps rising, then we expect that at some point to start retracing to the upside. So again, based on the monthly, weekly and daily trends, you'd only take short trades. So at the moment, at the moment I'd be cautious. I wouldn't be taking a short trade because of this bullish divergence. As soon as you see, for this to fail, you need to see the CCI drop below this entry point and the price also to keep falling. In that case, it'd be safer to take a trade. Back here, for example, because the monthly, weekly and daily were also bearish, that would have been an ideal spot to enter the trade. Somewhere around there, you see that there's a couple of points where it breaks below the moving average band. Especially seeing this bearish divergence, you would have taken that trade there. Eventually it fell off. And then once you see this bullish divergence happening as an early exit signal, you can start taking your profits. Or alternatively, I like to take it when the CCI breaks into that moving average band, even before the divergence started to occur. Now the British pound US is showing on the monthly, weekly, daily. It's showing still bullish movement on the monthly, but notice the CCI. It's actually coming down towards that moving average band, so it may actually touch it in the coming days possibly and at least turn neutral. If it keeps going down, it will turn bearish. But at the moment, the weekly and the daily are below that moving average band, so it's a bearish signal. So again, just be mindful as well. It's safer. The indicators generally are safer to follow on a larger time frame. So if you're trading on the daily, it's a lot more stable, if you like, in terms of taking short trades. For example, back there you would have taken the short trades and you would have exited probably when it touched that moving average band, re-enter it when it entered there, probably close it out there, enter it. Now you might have had a stop loss there, enter it again there, had a nice big drop, and you'd still be in a trade there. However, if you're trading on the lower time frames, again looking at the larger time frames as a trend, you can see there the stochastic market forecast is just above the 50 level, but it looks like it's actually trending slightly down. So in conjunction with the other indicators, including the ADX, it's showing bearish. We're looking at a bearish movement to the downside. On the hourly, that's still in the oversold, so we're looking at a potential bounce, and that also aligns, if we zoom in, that also aligns with this bullish divergence, similar to the other FOREX pairs we covered, with lower lows on the price, higher lows on the CCI, and it could possibly bounce from here. But again, this could keep falling. So long as the CCI keeps rising, we're going to consider that a bullish divergence. Lastly, looking at the New Zealand US dollar currency, bearish on the monthly, bearish on the weekly, and bearish on the daily. Again, would have been nice had you followed that. Take a short trade, any one of those points where it broke below the moving average bands. On the daily and hourly chart, again, the stochastic market forecast is below the 50 level, so bearish overall on the daily. And zooming in, the ADX is also bearish with its signal. On the 1 hour chart, in the oversold territory, so just be careful, we might see a bounce possibly. We did see a little bounce there, retrace up, but then it fell again. And if we zoom in, again, that was just a retrace to the upside of that Fibonacci range. Hit our target, went as high as, bounced down from the 61%. Just delete that, make it a bit cleaner. And we've got a bullish divergence here as well versus lower lows on the price. And again, this could keep rising. And if I draw a target at that point, this one, just as an example, I'll go back to that previous high. You can see there's just touching that 23%. So it may have already done its retrace before it could go higher, or it could actually bounce down from there. So it's already completed that retrace. To support us more, go to the Patreon page for Pete's Investing, where we also do weekly scans of blue chip shares that are trending along on a longer and medium term timeframes. Feel free to support us there, and we'll see you in a future video.